All right, welcome back to my channel. My name is Remigius. So, this is continuation of last video titled "Basics of Forex Trading for Beginners." So today we're going to be looking at major and minor currency pairs and what you as a beginner should trade. So, to start with, um, which of this currency you should actually trade as a beginner? We'll be unveiling these pairs in today's lecture. So today we are breaking it down in a simple real world term so you can start trading with confidence. So let's jump right in. So guys, first thing first, what are major currency pairs? Major currency pairs are the superstar, yeah, to say. They are the superstar pairs of the forex world. They all include the United States dollars and they are the most traded pairs globally. So these pairs are they include the United States dollars currency. So and we have the likes of Euro USD. We have the likes of Euro USD, Euro USD. We have Great British Pounds USD. We have USD JPY. We have USD CHF, and we have USD CAD. USD CAD, that's United States dollars versus Canadian dollars, and we have AUD USD. That's the Australian dollar and the United States dollars. We have NZ, NZD and the USD. That's the New Zealand dollar versus United States dollar. So as you can see here that these pairs listed on the screen here all comprises of United States dollars. So these are the major currencies that you should start trading as a beginner. So these pairs are popular because they offer high liquidity, so which means fast execution and tight spread. Spread. If you want me to talk more on spread, please kindly comment spread in the comment section, and I will further explain what spread means and how it affects your trade as a beginner. Yeah. So, and then the second reason why these pairs are popular and they are most traded is they have a lower trading cost. Yeah, the cost of placing a trade on each of these pairs are very low compared to the minor currencies. Yeah, minor currency pairs. And the third reason is they are more stable, which makes them easier to understand. They are more predictable. Yeah. When we proceed in the course of this tutorial, you understand what I mean by they are predictable. Yeah. When you carry out a technical analysis on these major pairs, they are very easy. They are easily predictable. Yeah. So, and the last but not the least reason why these pairs are more popular among forex trader in the world is they have a lot of educational resources available and the analysis available online. So these are the major reasons why these pairs are popular and they are most traded currency in the forex world. So guys, let's proceed. So it is known that if forex currency pairs should have celebrities, these major pairs should be regarded as a celebrity of forex trading. Yeah, because they are the most popular and most traded currency pair in the forex industry. So now, guys, without any further ado, let's go to the next one here because I don't want this video to take too much of our time. So we will now be looking at the minor pairs, the minor minor pairs. So minor pairs also called crosses. So these are the pairs that don't include the United States dollars. Yeah, they are called the minor pairs because they are not paired with United States dollars. And these pairs include Euro, Euro GBP, that's Eurozone versus Great British Pounds. And we have Euro JPY, yeah, and we have JBP, JPY, and we have AUDNZ NZD, Australian dollar versus New Zealand dollar, and we have CHF So these are the minor pairs, the minor pairs, most popular minor pairs we have in the the forex trading industry. So these pairs are still liquid, but generally come with a wider spread. Yeah, let me write it here. They comes with a wider spread. Yeah, and they are more volatile. Yeah, they are more volatile compared to our major pairs. They are more volatile. Yeah, and sometimes less predictable. Yeah, when compared to our major pairs that we stated on the other side, they are less predictable. Yeah, they are less predictable. And the last but not least, they are not beginners friendly. Yeah, they are not beginners friendly. They are not beginners friendly. So spread, they have a very wide spread compared to major pairs. They are more volatile than major pairs. They are less predictable, and they are not beginners friendly. As a beginner forex trader, it is not advisable to start trading these minor pairs because of this reason. And these reasons why minor pairs are not advisable for a beginner to start with um, affects a beginner trader in the sense of uh, when you place a trade, when you choose any of these minor pairs, this widespread will affect your trade. Yeah, because immediately you place a trade with one of these minor pair, you see your trade in a negative in drawdown. Yeah, you'll be in a drawdown, very big drawdown. So which is not advisable for beginner trader to start with, and they are more volatile. So within thinking of a high, you could see kind of 20, 20, 30, 50 pips coverage within some minutes, within seconds. And these they move a lot. In a day, they have a coverage of average coverage of like, for instance, GBP JPY has an average move of 120 to 150 pips in a day, so which is not beginner friendly. So that is why it's not recommended for beginners forex trader to uh, to start with. So, and minor pairs are great. This pair, they are great for traders who want more movement. Yeah, who love volatility, and but the movement cannot, can be dangerous sometimes. Yeah, that is why it's not advisable for beginner forex trader. Mhm. So let's go to uh, the differences, or let me say, compare the two side by side. That's the major and the minor pairs. So let me major and the minor, yeah, and the minor. So major pairs, yeah. So major pair has liquidity, yeah. Major pair has liquidity, yeah, but it is not liquid as minor. So this one is moderate. This one is higher, yeah. This one is moderate. You see, this one is moderate. Major is moderate, and minor is higher, right? In terms of liquidity. Then spread. Okay, that's spread. Yeah. Um, liquidity. Yeah. And so liquidity, major is moderate, while minor is higher. In terms of spread, major is low, has low spread, while minor pairs has higher spread. Then in terms of ideal for beginner, yeah, ideal for beginner, is it ideal for beginner? Yeah, this one is yes. Why minor is no. Minor is not ideal for beginners. Minor pairs are ideal for intermediate or advanced forex trader. So that is it. And major are smoother, they are cheaper in terms of execution cost. Um, what is this cost? When you sign up with a broker, and because you can only uh, trade these pairs, either major or minor, when you have signed up with a broker. So when you are placing a trade with your broker, so there's this percentage, this commission, yeah, that your broker will charge you for placing this trade on your behalf, yeah, or for carrying out your execution, your order. So this cost of order execution, they are lesser in major pairs compared to in minor pairs. So that is why major pairs are less expensive. It's just like when you are buying something, then you pay kind of a commission for buying so thing. Just like should I call it a tax? So that is the cost of executing, or the cost of trading that particular currency pair. So your broker will take it from you. So in major currency pairs, they are less expensive when compared to minor currency pairs. So that's it, guys. Because I don't want this video to be too long. If you have any question whatsoever, kindly put it in the comment section, and I will do justice to attend to your question. So if you are a beginner forex trader, the best place to start with is with the major pairs, most especially Euro USD, right? Most especially Euro USD, right? GBP USD and USD JPY. So these three pairs, they are most important to start with as a beginner forex trader. Yeah, because they are less expensive, has a very low spread, and easy to understand. Yeah, when you start carrying out your technical analysis on this pair, they are very easy to predict. And when it comes to fundamental analysis, like um, going in line or respecting news, they are very understandable. So these are the reason why I choose, or I will recommend these three pairs: Euro USD, JBP USD, and USD JPY for beginner forex traders. So these pairs help you learn the fundamentals without getting overwhelmed by the noise and the volatility of cross pairs. So guys, you can start right today. There are a lot of brokers out there you can choose. You can just Google it. Major forex broker. You see, so you will get tons of them. But make sure the broker you're choosing, has the required license to operate in your jurisdiction, right? So that is it. And please, guys, there is one thing I would like to say. Please take this very serious. You can It is advisable for you to start exploring minor pairs after you understand how spread affects profitability, how volatility impacts stop loss placement, and how different markets react to economic news. So when you understand these things, that is when it is advisable for you as a beginner trader to start laying your hands, or to start trading minor pairs. Only move into minors once you have a consistent strategy and risk management routine. So, to wrap it up, start with major, master the basics, and gradually expand into minor as your skill grows. Please, guys, if you found this helpful, hit the like button, subscribe, and comment below which pair you want me to master, or you want to master rather. So, I will see you in the next one. Bye.